Welcome. This is the third video in a series of three, looking at what it will actually take to close our $2 trillion annual deficit that we're running annually, and it's getting bigger and bigger every year. The first one looked at how we do it if all we do is cut spending. The second one looked at how we do it if all we do is raise taxes. And now we'll look at a combination of both. I want to make it clear, I'm not making policy recommendations here. What I want to do is have all Americans influence our elected officials to do something about the deficit. It's going to have to be bipartisan. There's going to have to be compromise. I want to show you here what a solution might look like. It's not going to be easy to do. There will be pain. It's going to have to be phased in over years. It's not something I'm suggesting we can do overnight that would cause a recession and lots of pain for people. The way I'm splitting this up is with two tiers. The first tier isn't going to get us very far, but it's the lowest paying opportunities: waste, fraud, compliance, efficiencies, subsidies, and some relatively targeted tax changes. Then we move into the structural problems in tier two: Social Security, healthcare, payroll taxes, broader tax preferences, and additional spending restraint. In this scenario, not going to touch defense other than procurement and management efficiencies. I'll do another video on defense. I think we're already at the low end of what we need to spend there. We need to retool. There's a lot of danger in the world. We have a lot of enemies. Again, you may not agree. That's fine. Do your own scenario. One way or another, we're going to need a combination of some pretty painful cuts and broad tax changes. I'm also certainly protecting anything related to veterans' earned health care and benefits, other than some administrative procurement and fraud savings. Okay, and again, I really want to make it clear. I'm not claiming this is one correct package. I'm just showing what a reasonably balanced $2 trillion solution requires. And it's important. I know how boring this probably is. This is probably a great sleep video, which is fine. But the fact is, all of us need to care about this. If you care about inflation, the number one way to get inflation under control is to have the government not have to print money for things that we're spending on that we're not collecting enough on, right? And if you care about interest rates, one of the things that makes interest rates more expensive is demand for borrowing, and we're borrowing a lot right now. In fact, we're paying $1 trillion a year on interest on our debt. If you have kids, you most certainly have to care about this, because your kids, our kids, my kids, and grandkids are going to inherit a much weaker America than we've had the benefit of enjoying. So we really have to do something about this. Anyway, let's jump in. If you want to see the actual numbers, I'm posting them on our website at longtermamerica.com. There's great articles there. I hope you'll join our email list. We meet from time to time, too, to talk about the issues respectfully, practice some debate skills, and figure out how to influence elected officials to do something about this. So let's get into it. Tier one, lower paying reforms. The first one: fraud, improper payments, and better administration. The GAO suggests that that there are $186 billion of improper payments as of 2025. Here I'm just putting $80 billion down. That's a reasonable estimate because not all of the improper payments are fraud or recoverable. And I'm doing this net of what it will take to recover costs. So that only gets us to 4%, right? People talk about fraud, improper payments all the time. That doesn't close a lot of our $2 trillion deficit, but it's a no-brainer. Of course we should do this. Next, reforms with Medicare payments. And here we're talking about stronger program integrity, not so much benefit cuts, but different ways that payments are made and modernizing how payments are made. A lot can be saved here, $140 billion. That gets us to 11% of our total goal. Same with Medicaid financing reforms with some tighter financing arrangements, eligibility controls, and reimbursement reforms. We could save $50 billion in Medicaid. That gets us to 13.5% of our total, or $270 billion. We should absolutely be doing that. Next, we can look at better tax compliance and narrower loopholes so that we can collect more legally owed taxes and also restrict some high-end shelters and avoidance strategies. That could be $120 billion. We're still only up to 19.5 of our goal. So we're not even at 20% of our goal yet with that 120 billion. You could get another 120 billion dollars from some moderate high income capital and estate tax reforms. So these would be some targeted increases on upper income households, some investment income, some large estates. Could be $120 billion. That gets us to a quarter of our goal, 25.5%. Civilian government efficiencies could be at least $70 billion. This is attrition, procurement improvements, IT modernization, real estate savings, contractor restraint, and getting rid of some duplicative administration. Again, this should be done. It's frustrating that it's not, but that could save $70 billion, get us to 29% of our goal. Defense, as I said, I don't want to do anything that will reduce our military capability, but we could have better contracting, acquisition, and logistics to save $50 billion. That gets us to 31.5% of our goal. Same with veterans affair efficiencies, maybe $15 billion. Again, we're not reducing earned veterans benefits or health care. That gets us to 32.3%. We could eliminate some selected subsidies and corporate welfare, like lower priority agriculture, energy, and industry-specific subsidies. That's $35 billion, gets us to 34% of our goal. And finally, in tier one, right? It's a lot of things. We could do some initial gradual Social Security reforms, very gradual retirement age and benefit growth changes, weighted towards higher income beneficiaries. Maybe there's $25 billion there that we could put in tier one. That only gets us to 35.3% of our goal. So after doing a lot of things that people routinely say Washington should just do, we're still about $1.3 trillion short. We have to make some hard structural changes. Again, here's a scenario. I'm not saying this is the scenario. My goal is to have all of us get onto our elected officials and tell them, look, just balance the budget, work together, figure out the best plan. So broader Social Security reforms, $200 billion. That's some additional retirement age increases, progressive indexing, slower future benefit growth, protecting lower income beneficiaries more strongly, but looking at more progressive approaches to Social Security. I've done a whole video on that you can look at. Maybe $200 billion annual improvement gets us up to 45.3% of our total. Same thing with Medicare. We can do broader Medicare reforms, have some more income-related premiums, stronger payment reform, greater cost discipline, slower expenditure growth, maybe $250 billion there. That gets us to 1.155 trillion, about 57.8% of our goal. Same with Medicaid and the Affordable Care Act. We can do some reforms there to save about $125 billion. Same stuff, slower spending growth, greater flexibility at the state level, and some structural financing and benefit reforms. Now we're at 64%. Payroll taxes. We might have to reform our payroll tax system. We could get about $175 billion more with a 1.5 percentage point combined payroll tax increase. Or if we do something like a smaller rate increase combined with a substantially larger Social Security wage base. So a pure 1% payroll tax increase is estimated by the CBO to raise about $118 billion this year. But if we do all of these things, 1.5%, we could get $175 billion more in revenue. There's consequences there, right? The employer pays half, the employee pays half. That could have an impact on hiring, on wage growth. But again, if we're serious about balancing the deficit or getting rid of the deficit, this is what we have to do. That gets us to 72.8% of our total. We can look at other tax reforms for high income earners. This would be a second layer of tax increases. Could mean $5,000 to $15,000 more for those in the $500,000 to $1 million household range, and $20,000 up to $50,000 or more for those in the million and up households. This could raise $150 billion and get us to 80.3% of our goal. And then we got to look at broader tax-based reforms. Again, taxing the rich alone isn't going to do it. I wish politicians would stop saying that All it does is create anger and envy and villainize people who are super productive. Can they pay more? Yes, that's what this shows. Although they'll change their behavior at a certain point. Anyway, we at some point do have to look at tax-based reforms across the whole country, reducing deductions, exclusions, and credits. That's good news. That means we don't have to rely on higher rates. Some upper middle and middle income households are going to be affected here. We'd be looking at $1,200 to $1,300 more per U.S. household. Still, that's nothing like the tax system and what it would require if we went to a Scandinavian system where it'd be more like $15,000 to $30,000 more. Anyway, this could raise as much as $175 billion, gets us to almost 90% of our total, 89%. We could do some other mandatory restraint and discretionary restraint for $120 billion. This would mean a lot of programs we cut spending for, either slower benefits and spending growth after all other efficiencies have been exhausted. Some government services and some beneficiaries of services are going to feel these. That gets us to 95%. And finally, last but not least, I could have put this higher up. Some sort of corporate tax reform could get us $100 billion. That means higher corporate taxation, fewer corporate tax preferences, stopping well short of making us uncompetitive in the world, but we can get some more here. That gets us up to 100%. What's the conclusion here? The first 700 billion is very difficult, but it's manageable. The next 1.3 trillion is where the real political choices begin. Again, I'm not suggesting we do it this way. This is just one way. You may want more taxes here, spending cuts here. You may want all spending cuts. You might want all broad tax increases. What's important is that we all understand the math. We all communicate with our elected officials, and we really have to get on top of our spending and on our deficits if we're going to want to enjoy a strong America well into the future. So I thank you for listening. If you want to see the numbers, if you want to get involved, please go to longtermamerica.com. We're regular people. We're all volunteers. We want to see a difference made here. We care about America beyond the next election cycle. It's not about saying this person's bad, that president was terrible, this party's the worst, that party's the worst. It's about looking at the what, the issues, the numbers, what it's really going to take to make real change beyond the next election cycle. Thank you.